welcome everyone. Bienvenue. And for those on webcast, hopefully you can hear me. I am Jim Kofman, Chairman and Interim CEO, although interim's taken a longer term than I thought it might have, of ZENN, and I'm going to act as Chairman of the meeting. I want to welcome everyone to the meeting. It's been an interesting year, and we'll talk a bit about that. We're going to go through the formal process of this meeting at the outset, if that's okay with everyone, and afterwards I'll talk in more detail about the business, about the year, and a little bit about going forward. So if it's okay, I think what I will do is hold off my remarks until after, and we'll go through the formal part of getting this meeting done, appointing all of the relevant people, and then we'll talk and answer all of your questions. So bear with me as I go through a bit of the legalese and we get this meeting underway. So I'll ask the meeting now come to order, and with your approval, I'll ask Natasha Vandersloot, who's our CFO, to act as Secretary of the meeting, and Alicia Seaton of Equity Financial Trust to act as scrutineer. I now ask the Secretary to table to the meeting the following documents: notice of meeting, instrument of proxy, information circular, the annual report, statutory declaration regarding service, and a letter sent to the regulatory authority certifying that all of this was sent to the auditors and each director and shareholder of record of the corporation. I also confirm the above material was sent to each director of the corporation or auditors, and these documents are tabled in order that any shareholder may examine them if so desired. In view of the fact that the notice of meeting and the statutory declaration proving service in accordance with the bylaws have been tabled and are available for inspection, I will now request a motion that reading of the notice of the meeting and the statutory declaration proving service be dispensed with. We have a seconder? Thank you. It has now been moved and seconded that the reading of the notice of meeting and the statutory declaration proving service be dispensed with. All those in favor signify by raising your hand. Contrary, if any? Okay, I'll take that as carried unanimously. Would the scrutineer report the number of shareholders present in person and the total number of shares they represent, together with the number of shares represented by proxy, please? Thank you very much. So there is a quorum present and proof of notice calling this meeting has been given. I now declare the meeting is regularly called and properly constituted for the transaction of business, and instruct the Secretary to attach the declaration to the minutes of the meeting. So now, in order to proceed with the election of directors for the ensuing year, accordingly, 5 directors are to be elected. I declare the meeting open for nominations. Thank you. Do we have any other nominations? Okay. The nominees named are nominees of management as disclosed in the information circular. I hereby declare the nominations closed. Would someone therefore make a motion that the persons nominated be elected as directors of the corporation? Thank you, Lonnie. You're a very eager shareholder doing all these motions. Do we have a seconder? We have a seconder for that motion, please. Thank you. Okay. All those in favor signify by raising your hand. Any contrary? Must not be a popular job then. Okay. I hereby declare that the individuals nominated have been elected as directors of the corporation for the ensuing year or until their successors are elected or appointed. I now present to the meeting the balance sheet and related financial statements of the corporation as of September 30, 2001, together with a report thereon of the auditors. Copies of such documents have been mailed to all shareholders and is not proposed to read them to the meeting. Unless anyone objects, I will now request a motion that the auditor's report be taken as read. Mr. Gale, since you become our keen seconder, I declare the resolution. Sorry, all those in favor signify by raising their hand. Contrary? Okay, I declare the resolution carried. Appointment of auditors. The next item of business for the resolution appointing auditors of the corporation for the ensuing year and authorizing the directors to fix their remuneration. Would someone therefore make a motion for the appointment of the auditors and authorize the directors to fix their remuneration? Mr. Kirsch. And seconder. Very consistent. And I apologize for those in the webcast. I don't think they're hearing the motions being moved because you're not in front of the microphone, but I think you hear the bulk of it. All those in favor signify by raising their hand. Contrary, if any? Okay, I declare that Collins Barrow, Toronto LP Chartered Accountants are appointed as the auditors of the corporation for the ensuing year to serve at such remuneration as may be fixed by the board. Approval of the ZENN stock option plan. The next item is to consider, and if thought fit, to pass a resolution in the form included in the information circular accompanying the notice of this meeting approving the adoption of the ZENN stock option plan as described in the circular. Are there any questions from shareholders relating to this motion? I will make a comment that that's obviously been an important part of our ability to remunerate. As you know, and we'll talk about further, certainly in my role as CEO, I've taken no compensation other than options, and we're just continuing the plan. We're not increasing it. It is important part of what we have available when we've got limited cash. So I think it's working well in your favor, but if there are any questions, this is the time to ask them regarding the option plan. Okay, with no questions, I would request a motion authorizing approval of the ZENN stock option plan. Okay, thank you. Mr. Gale? Thank you again. A ballot is required in order to confirm approval by a majority of votes cast. I will now ask the scrutineer to distribute ballots to all those shareholders who have not previously submitted proxies. Would you please complete and return your ballots to the scrutineer? Would people please raise their hand if they are shareholders present and haven't otherwise filled out a proxy for this matter? While that's happening, I'm going to move forward and we'll come back to the results and talk about the approval of the Shareholders' Rights Plan. The next item of business is to consider and if thought fit to pass a resolution approving the Shareholders' Rights Plan agreement, substantially in the form that was in the information circular. In order for Shareholders' Rights Plan to continue past the date of the meeting, it must be approved by a majority of votes of the independent shareholders. For these purposes, the terms of Shareholders' Rights Plan, the share ownership of the corporation have been reviewed. The plan will be properly confirmed if approved in the usual manner by a majority of the votes. And are there any questions? I will say before you ask questions that, again, shareholders' rights plans in Canada are very common. At the end of the day, all they really do is give management and a board a little more time to respond to unsolicited bids. They don't prevent takeover bids, and they're never intended to do that, but there's a view that under Canadian securities rules, the 35 days that's normally provided isn't enough if you have someone who comes out of the woodwork and puts your company into place. So it's really just to give you a little more time to solicit other interest, and that's the only purpose of it. Can I have any questions regarding that before we ask for a motion? Okay. Mr. Kirsch, why don't you speak into the mic?
Mr. Chairman, be it resolved that the ordinary resolution of the shareholders of the corporation in the form set forth on page 23 of the management information accompanying the notice of this meeting be approved.
Thank you. Mr. Gale, can we count on you to second again? Thank you. A ballot is required for this also to be confirmed by majority vote. I'll ask the scrutineer, I think, is already ahead of us in circulating ballots, and we will wait for her report. Okay. Well, look, why don't we move forward and we'll come back to those two items when we have a report. I don't want to keep people waiting unnecessarily. So let me move forward to talk a bit about the business, the last year, the challenges, and the opportunity. I have to say that a year ago, when I was being nominated to the board of directors, I never contemplated that a year later I would be standing at this podium as chairman of the company and as interim CEO. I was just appointed as a regular director, and being chairman came as a bit of a surprise to me. Being interim CEO for 3 months, starting at the beginning of June last year, seems it's a lot more than 3 months, and I'm still trying to figure out, as I said at the outset, what interim means. But individually, I'm a very determined person, determined to show substantial progress in this company, and that's what we worked hard at. I know that most of you here and those listening on the phone actually think or wish they were at the EEStor annual meeting, but this is the ZENN annual meeting, and therein lies the challenge that you know that we'd love to be in control of the questions and issues that are at the front of all of your minds, but we're not. In a large measure, we are takers of information, and over the last year, I've obviously learned a lot about the relationship between ZENN and EEStor, and of course inherited non-disclosure agreements that run some 20 years generally, that are incredibly restrictive on what we can say, and predated my time in the company. Also inherited the agreements that were there, and so we've had to work within those constraints. We'd like to constantly be updating you on progress, but we're restricted by our non-disclosure agreements, and quite frankly, EEStor doesn't just tell us on a day-to-day basis what's happening with their technology. The good news is that I can safely say, and I'm sure Ian Clifford can say, who's been around this longest, that the relationship between ZENN and EEStor is probably as strong as it's ever been, and certainly stronger than it's been in many, many years. There is a very good dialogue between the companies and regular rapport on many fronts. And I think the recent announcement, which we'll come back to, has demonstrated that we really are in a good position with them, much better than we were a year ago, because what everyone's looking for is real transparency and real disclosure. And I think the announcement we made yesterday puts us finally on a path where we have a clear methodology for getting to real public disclosure. And as part of that, we've been given much broader access to the company, been able to bring our experts with us to visit the company, and that, I think, also is positive. And I think you can all take some degree of comfort that we wouldn't have made this investment even though it was a very small one. It was an opportunistic situation for us if we didn't believe it was a good thing for the company, and most importantly, that it would lead to real public disclosure about where the technology is. So in the past year, if I can move to the next slide, thank you, we've made some pretty drastic changes to the company. When I joined the board, we said that the first mandate was to conduct a strategic review of the company, to take a look at the business, and all directors, those who'd been there previously, as well as the new directors, joined in that, and we looked at everything, and we looked at detail. we concluded, as we reported last year, that the company really needed to change its focus. It was spending money on developing its own technologies. It was investing in third-party technologies, all of which may have made sense if at that time EEStor's technology had already been revealed to the public and was ready for commercialization. But like many technology companies, we were at risk of running out of money before we ever found out whether EEStor's technology was there to commercialize. And so we made some tough decisions. We stopped investing in third-party opportunities, and we started phasing out our engineering department and the investment in our own internal technologies. It's not because we don't believe that makes sense at some time. It's just that we wanted to make everything move in lockstep with developments at EEStor, because the worst thing we could do is run out of money before the technology emerged. So we cut back our full-time employees from 14 to 5, and we have 2 part-time employees, one of whom is me, and the other is our former head of service, who's now part-time with us. So we've cut that back. Our cash burn, I think you can see dramatic changes. I know I do occasionally get on the blog and read it, although I hate to admit that publicly, just when I need entertainment. There's lots of speculation. Are we really making tough cuts, and what's happening with the money? The reality is, give or take, we were burning about $700,000 a quarter when I joined the board. Now our burn rate is probably down to just over $250,000. It's going to vary. There's things, whether it's annual meeting costs or the small investment we made in EEStor this past week. So there are things that come out of the woodwork, but we've dramatically cut our burn rate, and we think that's critical because we want to not spend money faster than the technology is being developed. And we're hopeful that after the next step, a reveal, that'll justify us potentially raising more capital and advancing some of our work. But we're not going to get out in front of the technology. I'm not sure we could cut our burn rate much below that because we have 2 things we have to do. We have to keep a public company going, and we have to continue with our service obligations on the ZENN cards. And I think that's what people forget. We do have expenditures both for our service department and some of the warranty expenses for cars that we sold. We got out of that business in April 2010, but we still have ongoing costs. So there's not much room to cut back expenses, and I doubt you'll find a CEO who will work for a lower cash comp than I do. So not sure there's room, we think, to cut much below where we are. So we've made pretty substantial changes, and I think what you could call ZENN today, it really is a holding company to some extent, focused entirely on the EEStor opportunity. That's what shareholders told us they wanted to do. They want us to spend the money on the relationship, and that's what we've done. So we've been able, as a result of that, to participate in their last financing, and that's what we'll do until the next development at EEStor. I'm going to stop for a second, get our scrutineer's report, and then continue with the business discussion in a sec. Okay. I have the scrutineer's report, and in both cases, over 6 million, in Resolution 3, 6.1 million shares were cast for, 936,000 against. In Resolution 2, 6.9 million for, 136,000 against. I think we can safely say both have been approved by an overwhelming majority, so I declare all of those motions passed. So, sorry, let me continue with my update on the business. So we've cut our costs, we've cut people, we're in a good position in terms of that. We previously announced that we're likely to undertake a modest financing, and we still intend to go ahead with that. We were keen to get this announcement out before we did that, but we still think we want to be the ones with the strong balance sheet so that we can be responsive to opportunities. The other thing about EEStor, obviously I've said that we are pretty restricted on what we can say. Let me just update you. I met Dick Weir before I joined the board and went down to Austin. We have kept a very regular dialogue. A number of directors have kept a regular dialogue with him and also have visited with EEStor in Texas. We're all somewhat frustrated that it's taken longer than people want. The last public reveal of anything was permittivity back in April of 2009. So we're almost 3 years out, and that's why it was extremely important to us to achieve what we've achieved in the past week, which is participating in this investment as a minority investor and being able to say to you here today that we now have a very clear agreement with EEStor, which provides for a mechanic for them to publicly reveal where their technology is and to do so certified by a third-party expert and in the near term. I'm not going to be drawn into specifically what near term means because I know everyone wants to know. I gather it's the new imminent, but this is Dick is a very secretive person. He's very careful about his patents, and we respect that. We've worked incredibly hard over the last year to earn his trust. There were some issues that happened a number of years ago that made him very cautious about making any statements for fear they'd end up in the public domain. I think we've demonstrated consistently to him that we can be trusted, and through that he's opened up much more to us than he had for a very long time. So what EEStor has to say is for them to say. What we've been able to do is stand in front of you and say, look, we have an agreement in writing, signed by all parties, that has a very clear protocol. And I don't know, one of the analysts who writes on it came up to me and said, does near term mean this? And I said, that's about as good a guess as I can make. But we actually have very specific dates in it. And I guess all I'll say to you is we're expecting this before the summer, if not well before that time. So it's not a long time frame, and I'm not going to get more specific than that. Hopefully that's as precise as you could expect. And again, I'm very conscious of balancing your desire for transparency and our need to not be sort of offside with Dick. So it's coming, and it's very specific also on what needs to be disclosed. So we're excited, and we think that's probably the most positive development that you could look for. The other thing, obviously, as you've been able to see, EEStor continues to file patents and work on its patent portfolio, and that's critical because there's lots of competition out there. So going forward, what's the path for ZENN? Look, we're going to make decisions as developments happen at EEStor, and we're not going to get out ahead of us. People ask us, are you going to build things? What are you going to do in technology? To some extent, I look forward to those problems and questions. We're very cautious in how we spend your money, and we're also realistic that technology, it's not, the real world is that when you get the next step in technology, it's not going to be something that you can run down to GM and plug it into your Chevy Volt. Technology works in steps, and there will be progress, I'm hopeful. But, you know, we have to work lockstep with their developments, and that's our plan. We haven't made decisions on what the long-term strategy for ZENN is, whether we'll develop technology, whether we'll work in joint venture partners, but we're very aware of all those issues and thinking about them. But, again, I kind of look forward to those being the challenges for the board of directors instead of the ones we currently face. With that, I think I will go to the next slide and just update you. I just want to make sure people know, because there have been lots of questions about what our technology rights are. So essentially, there are two things I want to address here. We have a technology agreement, and as you know, we have an investment. And we had to look hard at both as part of this whole annual financial process, both as directors, as management, and with our auditors to make sure we're comfortable with the carrying value. The good news is that both the auditors and the directors were able to conclude that there was no reason not to continue to carry those values. And, of course, that was before we had this current agreement. We were able to look at a number of factors in reaching that conclusion, including third-party views on opportunities to dispose of the assets, what the market valuation was, what our updated view on the business development was, and that's how we reached the conclusion. None of that should be surprising. The focus of the company in terms of the technology agreement is all about the automotive sector, and it's really about, call it, the small and medium vehicle sector, so the 1,400 kilogram and less. And we've looked at it. We've actually analyzed the top 50 selling vehicles in the world and looked at their weights, and you have to take out batteries, and it's a pretty big market for us. But in addition, We obviously have the more niche markets like the golf carts and the neighborhood vehicles and conversions. And importantly, people need to understand we also have non-exclusive rights to participate in the much broader passenger market above 1,400 kilograms. And we have very attractive pricing in our technology agreement that may give us a competitive advantage even in those markets. So we have a very big market to address. We have our equity holding and we have our technology agreement. We think we're in an attractive position. We'll all obviously do too, or you wouldn't be shareholders. But it all depends on, guess what we see in the near term, imminent, and how things progress. With that, I'm going to open it up to questions, both from the floor and if there are any from the web. I think I saw about 30 that were on the blog, and but go ahead if you have any questions. And I'd ask if you're in the floor, please go to the microphone and ask it. Any questions? Sure. You want to identify yourself too?
Sure, Mr. Kofman. It's Joe Novak, shareholder for, I'm going to say, a little over 2 years. Your announcement yesterday was fabulous. It's great. It's a huge accomplishment. It indicates that it's an equity investment. What particulars can you disclose regarding that at this time, or will we have to wait until the second quarter report?
The actual dollar amount will be disclosed in the second quarter report, so you will see the amount. It was very small, and I think Dick would prefer the amount of the financing for now specifically to be kept private, but we were not the majority investor in that, which actually was important to us too. We wanted another investor to take the lead, and quite frankly, the amount involved for us was not the issue. Almost didn't matter what we were getting for investment as long as we were getting the commitment to make the public statement, and that's what drove us. The economics of the pricing of the shares was truthfully secondary in our mind.
Thank you.
Hi there. My name is Glenn Freer. I'm a shareholder and have been since July of 2009. I know you can't really speak to specifics in regards to the NDA, and you're very encumbered by that. But you mentioned that near term means before the summer and hopefully well before the summer. Can you clarify for me if that means 2012 or 13 or 14 or what year exactly does that mean?
Oh, did I not mention it's 2015? No.
I don't think so.
I think you can safely assume it's this year.
Okay, thank you. My second question, if I may, is...
Is it going to be as tough as the
no,
first one?
No, it's not. Well, actually, it might be a little more tough. Now, the company, I guess, before you got involved, were going in different directions, energy and research and development and investing in other companies and whatnot. I'd like to know why it took the company so long to stop those activities with the burn rate that was going on when you, I assume, were in fairly, regular contact with EEStor and Dick Weir. I mean, I understand that the relationship may not have been the best, but I would have thought that you would have known before 2011, 2010 that, those avenues were not going to be fruitful. So I'd like you to just explain why it took so long to come to that conclusion.
Right. Well, it's a fair question, and one of my great strengths, of course, is being a quarterback in hindsight. Look, if you look back at it, in fairness to where it was, I think management was a lot like shareholders. They were constantly believing that things were imminent, and I think that was a term that was used. And the feeling was that if things are really progressing that fast, the company didn't want to get caught not ready for the technology. And it's a vicious circle. You start investing, you start believing in it, and it's very difficult to stop. And I think that's why, quite frankly, Ian, who'd stepped back from the board, was behind some of the changes to the board of directors a year ago. We felt that we needed a new, fresh set of eyes who wasn't sort of encumbered by where things were and could shake things up. It was really clear to us as new members of the board that we were on a path that we couldn't sustain. We would run out of money. Well, at that burn rate, we wouldn't be here today. Mm-hmm. And that's not what any shareholder wants. So I think the challenge was that even EEStor probably believed all of this was going to happen faster than it did, than things have unfolded. And that's difficult. And the other change that the new sort of management/board has seen is that I think we recognize that technology doesn't just happen overnight. So even if there is, in the near term, some public disclosure where they are, it doesn't mean that you're plugging into your Chevy Volt a week later, and that if we aren't ready to deliver, combined product and propulsion systems around that in a week, we're going to fail. It doesn't work like that. The proving cycle for the automotive industry in particular is incredibly complex and time-consuming. It's likely that the EEStor technology will be used in some of the other simpler applications well before automotive, where the cycle, for example, in your BlackBerry, if that company's still around. I didn't say that. I take that back. I have a BlackBerry. But in your BlackBerries, in easier devices to approve. So I think there was also an issue that they felt they needed the technology to be ready, and what we've come to realize is, look, we'll have time, and that's been our approach. We'll invest in sync, not ahead.
Okay. If I may, one more quick one. Sorry. I don't know how much you can say on this as well, but I'm assuming you've had this conversation with Dick Weir. How concerned is Dick Weir and ZENN about the other companies that are seemingly catching up to EEStor specs, and what is that driven this announcement that you made today? And that's my question.
Look, I don't want to put words in Dick's mouth. Dick is able to say his own comments, but I will say that Dick remains incredibly bullish that there's no technology that is like his technology. I'm probably paid, maybe whatever, to be a little more of a skeptic, and I push hard, and our board pushes hard, because we recognize that eventually there will be competitive technologies one way or the other, so time is of the essence. But in fairness, to date, we haven't seen anything that has the potential that this technology has. Not yet. But it will come.
Oh, thanks.
Are you seconding something?
Oh, not at the moment. Tobin Gale, for those of you who don't know, one of the founders of the company with Ian and Merrick, and I'm originally the Chief Technology Officer. I'm sort of asking this. I'm actually at arm's length to the company, so this will also be good for me. As you mentioned a while ago, the fact that previously not wanting to be sort of kept caught unprepared with EEStor imminently coming out. What can you say to us, if anything, regarding any potential thoughts you have on any strategic moves as we are imminently looking at some imminent exposure?
Right. Well, look, I've been involved in one way or another with all sorts of aspects of the automotive industry, from the GM restructuring to work with Magna, to work with a number of the auto parts companies. Been around the sector for a long time, transactionally, finance-wise, and relationship-wise. I think my view and the board's view is that as the technology progresses, we really demonstrate something that's exciting. It will be very easy for us to raise capital, to get the right people on board, to get the attention of the automotive companies, whether it's the Tier 1 suppliers or the OEMs. And we're pretty optimistic that it's not going to be difficult for us to get into the dialogues. As to whether we need to hire 25 engineers and accelerate development of complementary technology, again, I think our thought is that if and when that's an issue, again, it's a problem I look forward to, but we would likely work in joint ventures with the automotive companies as opposed to try and invent the wheel ourselves. I think companies prefer, in this kind of technology, to be involved in their own propulsion systems. So our initial thoughts are that we'll be working in joint ventures with them, but we're not ready to make those decisions. And it may be that someone comes in and wants to buy the company or the technology for a very compelling price. We can't predict that, and we're going to do whatever it takes to get the most value for shareholders, and that's all that any of us care about on the board, despite many of the conspiracy theorists who probably met at the Loose Moose earlier today, based on what I saw on the blog, and have through the year had incredible conspiracy theories on what we're really up to. Are there any online?
Yes, I have a couple here.
I'm just going to take one online, not to.
They want to know if we'll wait till the near-term announcement before attempting to raise capital.
Unlikely. I think, our view is that we have an agreement and we want to move forward, but we, as I said, want to be the ones with the pockets if opportunities like the one we just had to invest come up where we can advantage our relationship. So we're going to continue moving forward to strengthen our balance sheet. We're getting to the point where I don't feel comfortable with the amount of cash in the company. It's a little over $750,000 roughly, which isn't a lot of money for a public company. So while I'd rather wait because I think it'll be a better time to raise, we're not necessarily going to wait to do it just to add some cash. I just think it's in everybody's interest to make sure we have a strong balance sheet and we're ready for anything.
I also have another question. They're looking for some information about the experts that we might use.
They know a lot about the space. I'm not going to reveal the name because the person will get a phone call immediately after the meeting, but we've been very careful choosing a firm that's extremely well known in the space, knows what they're doing, has been looking at this technology for a long time, and was able to be of significant assistance to us and also will be in the future. But they're a firm that would be well known to people who know the space and very reputable and very independent of all of us. And we're able to be responsive. Sorry, sir.
George Miller. I've been an investor since 2008. There's been a lot of speculation over the years about the nature of your agreement with EEStor. And my concern is does the agreement guarantee ZENN any particular percentage of their production? EEStor is going to have a lot of varied customers. We're only one of them.
Right.
How do we, what information can you tell us about
Sure.
their ability to produce for us, and what percentage of the production is
right? Well, we under the technology agreement, we have exclusive rights, as you know, for certain areas, and we have supply rights, and they have obligations to deliver. We have an undertaking, a good faith undertaking, that once they're ready for production, that we have to sort out in good faith the terms of the supply agreement. So we don't have specifics as percentage of production, if that's your question. But it is the agreement that we have that dates to 2007 does contemplate that there will be a separate protocol worked out. But I think it was difficult at the time to figure out.
Exactly.
So it's a good question, and it's a legitimate business issue.
Hi, my name is Neil Clifford. I've been a shareholder for some years now. Can you define what exclusive and non-exclusive rights mean? Can you create some scenarios that might shed some light on what non-exclusive would mean?
Sure. I mean, exclusive is easy. If you're selling if General Motors needs to buy wants to buy an EESU, replace their lithium-ion batteries in a Chevy Volt, that's a 16 kilowatt-hour battery right now, and it's a vehicle that weighs under 1,400 kilograms extra batteries. We are the only ones in the world who can supply that EESU made by EEStor to them. We have to add value to it as part of the supply, but we are the only ones who can supply that. On the other hand, if they wanted to take a passenger car, so a Cadillac CTS, I don't know what it weighs, but I'm sure it's well over 1,400 kilograms. We are allowed to sell into that market, but so is EEStor or someone else that may choose to supply the EESUs. The difference is that we have a pre-agreed maximum price that the EESUs are sold to us at, so that may give us a competitive advantage. We think it's attractive pricing. So there's a market where no one else can sell into it, and there's a market where we can sell. That's the passenger vehicles over 1,400, as well as the high-performance sports cars, which are the basically vehicles that are above 100 kilowatt-hour batteries, where we can sell, but we don't have any exclusivity.
Okay, so the non-exclusive, so companies can come to ZENN with...
Sorry, you see it up there, the non-exclusive.
Right. So you can have something attractive to anybody in the market automotively that would come to ZENN to
I don't know if you can read the small exceptions, but sports utilities, pickups, trucks, trams, buses are not necessarily covered.
Okay. Thanks.
But we do have passenger vehicles and high-performance sports cars, which is a pretty big market.
Yeah. Okay. Thank you.
I'm Paul Fujimoto. I've been a shareholder since 2009. If you can fill in a little more of the details about the latest investment in EEStor, whether it was dilutive to ZENN's holdings, the 10.7%, and if there's any more detail about the other investor or investors, if there are multiple, and also. My second question is about the state of EEStor's finances, and I'm sure some people around here have realized that they have recently put up some equipment for sale, which concerns me as a shareholder. To raise $100,000 from selling old equipment seems like they're getting a little more desperate for money, and so. To me, that could potentially signal a problem in
Well, look, let me speak a bit to the second, although it's not really for me to answer. It's for Dick. Although I sold an old pair of skis the other day, it doesn't mean I'm running out of money. I just don't use those skis anymore. And I think really for EEStor, this is equipment they're not currently using and they don't see a use for. And definitely capital is more interesting to them than equipment that's just going to get less and less value over time. So they're getting rid of equipment, as I understand, that they're not using and don't expect to use. As to the investment, obviously I can't say everything. What I will say is two things. We invested the same price as majority investors. And secondly, that it is anything but dilutive, is at a significantly higher price than our prior investments. But I won't be specific on it. I'm not trying to avoid the question. I'm trying to balance giving you an answer that it's definitely at a higher price. But as I said, to some extent, price wasn't the issue for us. It was the commitment that we got out of it, but not dilutive. Any other questions?
I have one more. I guess last year you described this as a once-in-a-lifetime opportunity, and they're just wanting to know your thoughts after this past year.
I don't think I said once-in-a-lifetime opportunity. Those weren't my words. What I said is people asked me why I joined the board, and I said that there are few opportunities you see like this one where, if it happens, the upside is so significant. And nothing has changed in that respect. I'm as disappointed as you that we're 12 months from now and we still don't have any public progress in terms of actually telling you where the technology is. But the opportunity hasn't gotten smaller, and I guess the positive is we're now in the near term. So if there are no further questions, I'm going to ask for a motion to adjourn the meeting. I do want to thank everyone for coming. Again, I committed transparency. I know a lot of you felt that I haven't lived up to my obligation. It is a very difficult role, as I said when I joined this. We don't control the pace of development, and we don't control disclosure. We're takers on both those things. And it hasn't been easy because I'd like to tell you even more, but I have to, and the board has to, and management has to respect the balance between what EEStor wants. They are our critical partner and what you want. And it's never going to make everybody happy, but I can tell you with assurance there is no hidden agenda other than creating value for everybody. And as you know, in September we put in a pretty novel option plan for the directors where we get zero. And I get zero as CEO unless by September of this year, hopefully in the near term, not in September, we'll see significant technological progress. So I don't know what more we can do to convince you that we have your interests at heart. We do. We're trying hard, but we have limits. So, Mr. Kirsch, you've done such a good job in moving motions. I can't imagine anyone else want to do it. Sounds good. All in favor? Thank you, and all of the board members, and by the way, Natasha Vandersloot, who not all of you met, who was recently formally appointed as our CFO, who was great. You should meet, and we're here to talk. So thank you for coming, and hopefully we'll have more to say soon.